activity.
OK, well, we'll have to leave it there. We'll take a break now. My thanks to Nick Hastings, senior correspondent at Dow Jones Newswire. Bob Parker staying with us to review some of the big corporate stories of the week, and that coming up in a couple of minutes.
This week on CNBC. Tuesday, full-year results from Air France. What effect has BA's positive results had on them? CEO Jean-Cyril Spinetta live from Paris. Wednesday, Northern Foods full-year results. Has the foot-and-mouth outbreak had a negative effect, just as most other British food companies have experienced? Thursday, is the Allianz-Dresdner merger on track? Full-year results from Allianz worth scrutinising. Manchester United's full-year results. Have soccer funds gone out of fashion? Will Alex Ferguson stay or go? And how will this affect their market share? Some of what's ahead this week on CNBC. Every day,
9 minutes away,
it triggers high volumes of trading activity.
we approach
In many different locations around Europe. CNBC is there, live. Market Open.
The market open is crucial because that's when you get all the news and information that is often the key to the way the stock trades through the rest of the day.
Kicking off with Daniel Scott, live from Frankfurt.
The first few minutes.
Biggest gainer today. Markets can move quite dramatically in the last few minutes of trading. Most of the European markets have shut. A lot of people are working out their positions. That's why it's vital that we're on the air.
European Market Open, European Market Close. The place to be. The place to be live. CNBC. Profit from it. In business, every second counts. You need to be in more than one place at a time. CNBC is when markets open, live. When big stories break, live. The market action, live. CNBC, real-time, Europe-wide, worldwide. CNBC, profit from it.
Hello again. Well, I'm reviewing the key financial and business stories of the week with Bob Parker, Deputy Chairman of Credit Suisse Asset Management. First, a quick look at how the equity markets performed this week. So let's kick off with the FTSE, still away from that tantalising 6,000 level. As you can see from that chart, had a run-up, but running out of steam, really, and certainly on Friday, no lead from US GDP numbers or durable goods. Let's have a look at how the DAX also traded, and again, it's a similar story, taking its lead from more buoyant US markets at the start of the week, but running out of steam towards the end. Those durable goods numbers coming down down 5%. Finally, the CAC 40, you can see there, a similar picture, tailing off at the end of the week. So, Bob, you know, durable goods as well weighing on the markets at the end of the week. Have they now run out of steam, do you think?
Well, I think the first comment is that it's interesting, particularly from the graphs you've just shown, how correlated markets have been this week. You've seen all the markets run up at the beginning and then start to tail off at the end. And you know, clearly, when the markets were stronger earlier in the week, they were very vulnerable to some profit-taking, and they were very vulnerable to negative economic news or corporate earnings numbers. And you know, everything we've had out of Europe this week, out of the States, particularly the downward revision to GNP, the durable goods is a major downward number. Nothing in that supported markets. So it was absolutely inevitable that we've had this setback.
OK. Right, well, joining us now is Brian Roberts. He's of Retail Intelligence to discuss events this week in Europe's retail sector. Brian, welcome. Thanks for coming in. Well, the first Spanish retail giant Inditex took Madrid market by storm on Wednesday. Shares in the owner of the Zara fashion chain soared on debut, adding €2 billion of market value to one of Europe's biggest clothing retailers. CNBC's Paris bureau chief Shelley Carabel was in Madrid on the day.
It was up and away as Inditex debuted on the Madrid Bolsa. The shares soared 26% within the first few minutes of trading, valuing the parent company of retailer Zara at over €9 billion. The 23% float will net more than €2 billion. And where will the money go?
That the money is going for the present shareholders of the company, not for the company. The majority of the money is going for Mr. Ortega and his family.
Institutional investors oversubscribed the offer 53 times, but not everyone is happy with the price.
Well, I think it's not cheap. I made an estimation of about 18 euros as opening price. The opening price has been higher and it's been maintained. I think that it would be good for the company to consolidate this level.
Zara accounts for 77% of Inditex's revenues, and the company has no plans to change that mix. The brand does well in Spain, the UK, and the US. Countries like Germany and Brazil need a boost. A new lingerie line scheduled for autumn release should help. Inditex is forecasting a 20% growth in revenue this year.
The markets haven't seen this kind of IPO enthusiasm since sometime last year. You could call it dot-com hype for an old economy stock. Shelley Carabel, CNBC, at the Bolsa in Madrid.
Brian, a great debut for the stock and actually continued to hold up during the week. I mean, will it continue to hold up? I mean, is this just sort of IPO enthusiasm, or will it continue to hold up, do you think?
No, it's a fundamentally impressive business. Its track record at growing profitably has been second to none, really, averaging at around over 25% growth over the last 5 years. It's maintained its operating margins at around 21%. There's a lot of scope for physical expansion, mainly for Zara, but there's 5 other brands which can also be expanded. I mean, Zara, for example, isn't present in Italy yet, so that could sustain up to 100 stores. So if you apply the same sort of potential to the existing markets, such as the UK and Germany, there is a lot of potential there.
So what are Inditex doing that some of its competitors, like perhaps Hennes & Mauritz, what are they doing right that Hennes & Mauritz are doing wrong?
It's quite a different business model which Inditex has developed. Its retail activities are underpinned by dozens of factories and its own logistics centre in La Coruña. So its lead time from drawing board to store is around 3 to 4 weeks, which is incredibly quick. It enables great flexibility and also allows them to make mistakes.
So that, they can see a trend and get it into their stores very quickly in a way that Hennes & Mauritz can't.
Exactly, and people like M&S, for example, who've had their own documented problems this week, have lead times of around up to 9 months in some cases, so it gives greater flexibility and greater responsiveness to changing market conditions.
OK, right, we're going to talk about M&S in more detail shortly. Bob, I mean, just in general, seeing this IPO, it's rather a sort of ray of sunshine, isn't it? I mean, are we seeing a bit of life being breathed back generally into the IPO market, do you think?
I think the clear answer to that is no. I think, in the case of Inditex, clearly their market timing was good because we've had very strong equity markets in April and May. I think generally it's very difficult to see a surge or resurgence of IPO activity. I don't think the markets are strong enough, and I think in addition investors will look very carefully at companies and particularly at their cash flows and business management model. And as Brian was mentioning, this is a very strongly managed company. It's a success story. So its IPO is a success, but you can't take this one example and generalise.
No. I mean, quite interesting that the division certainly was very much focused on institutional investors. I mean, does that suggest that, I mean, obviously in Spain, retail investors perhaps got stung by Iberia, Moviles, among others. So, I mean, does that suggest that they're still very, very cautious?
I think the answer to that is generally yes. You're not seeing a surge back in the European markets, back into equities through retail activity. It's clear that over the last 6 months there has been this swing back to institutionally dominated markets. Now that may change later in the year, but it's not the situation now.
Brian, I mean, what's your perception